Well, we are just about 15 minutes away from the start of trading on this Monday morning. As we mentioned, the U.S. futures are pointing to a positive start. Of course, recently we've started to see some uncertainty in the broader North American stock market. We've seen the TSX and the U.S. S&P 500 come off their best levels. Some people worried about the geopolitical story. Some people worried about, in the United States, the U.S. Federal Reserve pushing out its plans to cut interest rates. And then, of course, we've now got lots of earnings stories to navigate. But our next guest still sees plenty of opportunity for long-term investors. Liz Miller is president of Summit Place Financial Advisors, and she joins us now. Liz, great to see you. What have you made of sort of the general worry point in the market? I mean, is there anything that really stands out in terms of the recent weakness that we've seen?
I think what we've really seen is a lot of profit taking, but clearly in the U.S. kicked off by 2 months of slightly stronger, I would call it stickier inflation, which really shouldn't be a surprise. And the Fed, our Federal Reserve, more consistently now saying rates may stay higher for longer. Originally, we started this year looking for 3 interest rate cuts, and that really was fueling this market rally. Now we're debating when we get 2, if we get 2. So for the United States, it's certainly the interest rate outlook that has tipped this market back a bit. And
as you observe all that playing out, as an investor, how do you feel about it?
Well, I think that it's really instructive to take a look at inflation around the globe. We were just doing some internal work, and if you look at inflation across developed countries all over the world, it looks remarkably similar. Everybody had a very fast ramp up at the same time, and everyone's been coming down to similar kind of levels. Now, what's interesting is that every central bank didn't follow the U.S. Fed. Not everybody rose interest rates as aggressively and as high. So we stand out with that incredible move in our interest rates, and yet our inflation outcomes don't look any different. That to us says that it's really been a supply side matter, that as many of us predicted, that inflation was mostly driven by supply chain bottlenecks, issues that took a while to work their way out post-COVID, and they've kind of mostly worked their way out. Monetary policy can't really do anything about that. So now what the Fed is trying to do is looking at not just the stronger inflation, but the stronger growth in the United States, and trying to decide if it needs to use monetary policy to try to mitigate some of that growth strength.
It has felt like with the recent weakness in the market, as people are kind of assessing what that ultimately means, the easy thing for them to do was to target some of the best performing stocks, or stocks that were perceived to be part of a better performing group. Apple comes to mind. Apple has been navigating some other headwinds and headlines associated with their business right now. But, you know, it's interesting. You look up at Apple stock this year, it's now down, I think, something like 14%. So as an opportunistic investor, how do you feel about a stock like Apple right now?
We really think this is one of your opportunities to buy Apple. You don't get that many over the long term. And what you see with tech in particular, I was just looking at all the different sectors and what they've done year to date. As we saw in 2023, this market is not moving as one. It's moving as different sectors. And as strong as tech was in 2023, now it's turned around a bit. But if you were to string together 2022, 2023, 2024 year to date, then you see a very interesting story in which tech still shows positive returns, but many other sectors of the market are flat to down over 2 years. And that's what gives us a lot of confidence in the overall market's ability to move higher. You look at Apple specifically, while it's gone sideways along the way, it's trading today at a price that we last also saw in 2021. So despite the ups and downs, it's really gone sideways now for almost 3 years. That's usually a great opportunity to know that a company with a long track record of figuring out its product cycles, being being innovative, it will have appreciation returns and ability for many years to come. So good buying opportunity here.
Meanwhile, Liz, another stock you're watching right now is BlackRock. We're going to have a report later in the program about how quickly the company has been able to become the dominant player in the Bitcoin ETF world, but they're obviously a huge player, broadly speaking, in the investment world. The shares are down this year. Again, similar opportunity in your opinion?
Yes, BlackRock down about 7% so far. Financials, a sector that has been struggling to participate because it does keep reflecting that anticipated change in interest rates. But BlackRock as a whole isn't tied as much to those interest rates as we think about a typical financial company, very much tied to investor interest. We know that investors are still working their way back into the market. We know BlackRock is leading right now, like as you mentioned, with the Bitcoin ETF, but certainly a wide range of exchange traded funds for where they are often the investment of choice. And so we see plenty of demand upside for their products. And again, an opportunity to get in at an attractive price, below market, trending in terms of performance, underperforming for a short amount of time. So a good long-term buying opportunity.
You're on a roll, Liz, with these stock ideas. So I'm going to ask one more before we wrap things up. This one in a different sector, an agriculture or agribio company. The ticker symbol is CTVA. Tell us a little bit more about the business.
Sure. Corteva is a spin-off from the old Dow, Dow DuPont. I forget which side even now. But in the engineered seeds. And that goes in waves as being attractive or unattractive for those who are socially minded. But the business of it is incredibly important right now. This also is a stock that struggled for a while, has some good momentum with it right now, but is still attractively priced and really plays into some of those global trends. You know, we do see pressure on commodity food prices. We do see demand out there that, outstrips supply in different areas. And this is a great way to play that with a company that's fundamentally strong.